Let's be honest. Home ownership in America is a myth. You don't own your land, you are merely a tenant, and the county government is your landlord. The rent is called property tax. Unlike a fixed mortgage, this rent goes up forever. And if you refuse to pay, they won't just send a letter. They will seize your home and auction it off. For a retiree on a fixed income, this is the ultimate trap. You budget for food and medicine, but get hit with a $6,000 tax bill that forces you to choose between heating and eating. But there are escape hatches. We aren't talking about tiny $50 senior discounts. We found the specific states with 100% homestead exemptions and assessment freezes, designed to protect the elderly. We analyzed the tax codes to find the last 7 strongholds where you can legally tell the tax assessor to get lost. Here are the 7 states where you can stop paying property tax in 2026. Number 7. West Virginia. We start in Appalachia. West Virginia is already famous for having some of the lowest median property tax rates in the nation, roughly 0.59%. Specifically, we are looking at the senior citizen tax credit and the homestead exemption. If you are 65 or older or permanently disabled, the first $20,000 of your home's assessed value is completely exempt from taxation. Now, $20,000 sounds like peanuts in California or New York, but in West Virginia, where you can still find a decent brick rancher for $120,000, that exemption wipes out a huge chunk of the liability. Furthermore, there is the senior citizen tax credit. If your income is low enough, below 150% of the federal poverty guideline, you can claim a refundable income tax credit for the property taxes you do pay. Essentially, the state pays you back for paying them. The math? On a $100,000 home in McDowell County, your annual tax bill might be $600. With the exemptions, you could knock that down to under $300 a year. That is $25 a month. That is pocket change territory. The catch: the inventory tax and the infrastructure collapse. West Virginia has to make money somewhere. And since they don't get it from your house, they get it from your car. West Virginia is one of the few states that still enforces a brutal personal property tax on vehicles. If you own a nice truck, an RV, a boat, or a trailer, you get taxed on them every single year. We have seen retirees move here to save on house tax, only to get hit with a $1,000 annual bill for their new Ford F-150. Then there is the issue of services. Low taxes mean low revenue. The roads in rural West Virginia are notorious. We aren't just talking about potholes. We are talking about slides where the entire lane has fallen down the mountain and hasn't been fixed in 2 years. If you have a heart attack, the ambulance might take 45 minutes to reach you because the local volunteer fire department is underfunded. You are trading your tax bill for a higher risk of dying before you reach the hospital. Number 6. Texas. Everyone thinks Texas is a tax haven because there is no state income tax. But usually Texas is a property tax trap. The average property tax rate is nearly 2.0%, which is one of the highest in the nation. You save on income tax, but the local appraisal district bleeds you dry on your house. However, for seniors over 65, Texas offers a unique shield: the school tax freeze. In Texas, the biggest chunk of your tax bill is for the local school district ISD. Once you turn 65 and file your homestead exemption, the dollar amount you pay for school taxes is frozen for the rest of your life. It is a ceiling. Even if your house doubles in value, the amount you pay to the school district cannot go up. And if the tax rate goes down, your bill goes down. But it can never go up. Additionally, you get a mandatory $40,000 exemption on school taxes, plus a separate $10,000 optional exemption for being over 65. This allows you to lock in your housing costs. You stop inflation from evicting you. The catch: the Robin Hood recapture and the insurance nightmare. The freeze sounds great, but it applies to the amount you pay, not the value of the home. Other taxing entities, like the hospital district, the county road fund, the mud districts, MUEDs do not have to freeze your taxes, unless the county specifically votes to do so, which many don't. So while the school portion stops rising, the other 40% of your bill can skyrocket as your home value appreciates. And then there is the hidden tax: insurance. Texas has the highest homeowner insurance premiums in the country due to hail, tornadoes, and hurricanes. You might save $2,000 on taxes because of the freeze, but your insurance premium just jumped from $2,500 this year. When you add tax plus insurance together, the Texas discount often evaporates. Also, the no-income tax benefit only helps you if you have a high income. If you are living on Social Security, which is already tax-free federally in many cases, the lack of state income tax doesn't actually save you money, but the high sales tax, 8.25%. Number 5. South Carolina. South Carolina is the quiet favorite for retirees who find Florida too crazy and North Carolina too expensive. The base property tax rate here is already incredibly low, around 0.55%. But for seniors 65 plus, it gets aggressive. It is called the Homestead Exemption. If you have lived in South Carolina for 1 year and you are 65, blind, or disabled, the first $50,000 of your home's fair market value is exempt from all property taxes. Let's run the numbers. If you buy a modest mobile home or a small cabin for $80,000 in a rural county like Oconee or Anderson, minus the $50,000 exemption, you are only taxed on $30,000. The assessment ratio for a primary residence is 4%, so the taxable value is $1,200. Apply a rural millage rate of 250 mils. Your annual tax bill is $300. That is $25 a month. That is less than a Netflix subscription. The catch: the 6% trap and the vehicle tax. You have to be very careful when you buy. In South Carolina, primary residences are taxed at an assessment ratio of 4%, but second homes and investment properties are taxed at 6%. That sounds like a small difference, but it's not. It mathematically results in a tax bill that is 300% higher because the 6% properties also don't get the exemptions credit. When you move here, you must immediately file for legal residence status. If you forget to file the paperwork, or if the county thinks you are renting the house out on Airbnb, they will slap you with the 6% rate. We have seen people buy a house expecting an $800 tax bill and receiving a $3,500 tax bill because they messed up the paperwork. And like West Virginia, South Carolina loves to tax your car. You pay property tax on your vehicle every single year before you can get your registration sticker. If you drive a new $60,000 truck to tow your boat, be prepared to write a $900 check to the county every year just for the privilege of driving it. The state gets its money one way or another. Number 4. Mississippi. If you are willing to embrace the Deep South, Mississippi offers one of the most aggressive tax shelters for retirees in the entire United States. It is not just about low rates. It is about a specific exemption code designed to attract seniors who are fleeing high-tax states like Illinois and New York. We are talking about Article 1721(5) of the Mississippi Code. Here is how it works. Standard homeowners get a homestead exemption, but once you turn 65, or if you are totally disabled, you unlock the special senior exemption. This exemption completely exempts the first $75,000 of the true value of your home from all ad valorem taxes. Now pause for a second. In California, $75,000 buys you a parking spot. But in Mississippi, specifically in rural counties like Lee, Pontotoc, or Union, $75,000 is still the price of a livable 3-bedroom brick home on a half-acre of land. If your home is appraised at $75,000 or less, your property tax bill is zero. Nothing. You do not pay the county. You do not pay the city. You do not pay the school district. You own the house, and the government gets nothing. Even if you buy a nicer home, say a $150,000 retirement villa near Oxford, you still get that first $75,000 tax-free. You are only paying taxes on the remaining $75,000. At a typical millage rate of 120 mils, with an assessment ratio of 10%, your annual bill on that $150,000 house would be roughly $900. Compare that to New Jersey, where the same house would cost you $6,000 a year in taxes. You are saving $5,000 a year simply by changing your zip code. The bonus, the income tax shield. It's not just the house. Mississippi is one of the few states that exempts all retirement income from state income tax. Social Security, tax-free. 401k distributions, tax-free. IRA withdrawals, tax-free. Public and private pensions, tax-free. For a retiree, Mississippi is essentially a tax haven on par with the Cayman Islands, just with more humidity and better fried catfish. The catch: the grocery tax and the healthcare desert. The state government is not a charity. They lost money on your house, so they are going to take it when you eat. Mississippi has the highest sales tax on groceries in the nation. The state sales tax is 7%, and unlike most states, food is not exempt. Some municipalities add their own 1 or 2% on top of that. Every time you buy a loaf of bread, a gallon of milk, or a carton of eggs, you are paying nearly 9% tax. If you spend $600 a month on groceries, you are paying $650 a year in food tax. It is a regressive tax that hits the poor and the elderly the hardest. You might save on property tax, but you are being nickel and dimed at the checkout counter. Then there is the grim reality of healthcare. We have to be blunt. Mississippi consistently ranks dead last, 50th in healthcare outcomes and access. Rural hospitals are closing at an alarming rate. If you have a complex condition, cancer, advanced heart disease, rare autoimmune issues, you cannot rely on local care. You will be forcing yourself to drive to Jackson UMMC or across the state line to Memphis or Birmingham for decent specialists. The money you save on taxes might eventually be spent on gas money driving 3 hours to see a cardiologist who accepts Medicare. This is a state for the healthy retiree, not the frail one. Number 3. Georgia. Georgia is the hidden champion of this list. It doesn't get the headlines like Florida or Texas, but for a specific type of retiree, it is actually superior. The secret lies in the school tax exemption. In almost every county in America, the school tax makes up the majority of your property tax bill, usually 60 to 70% of the total. You are paying for high school football stadiums and smartboards, even though your kids graduated 40 years ago. Georgia allows individual counties to vote to exempt seniors from this specific burden. And the good news, most of the desirable suburban counties have voted yes. Let's look at Cobb County, suburban Atlanta. At age 62, you get a significant exemption, but at age 65, you get a 100% exemption from all school general and school bond taxes. This applies to your house and up to 1 acre of land. Let's do the real-world math on a $350,000 house in Cobb County. A standard family pays about $4,200 a year in property taxes. Roughly $2,800 of that is school tax. The moment you turn 65 and file the affidavit, that $2,800 vanishes. Your bill drops to $1,400. You just gave yourself a $230 a month raise. Tax-free. Other counties are even more aggressive. In Forsyth County and Cherokee County, similar exemptions apply. In Glynn County, near the coast, St. Simon's Island, at age 65, if your income is below a certain threshold, you can get massive relief. This allows you to live in a high-service area with good roads, great hospitals, and shopping malls, without paying the high service price tag. You are essentially freeloading off the younger families who are paying the full freight for the schools. The catch: the traffic tax and the age gap trap. There is a reason these counties offer exemptions. They are crowded. Cobb, Cherokee, Gwinnett. These are not quiet rural towns. These are booming suburbs. The traffic tax in Metro Atlanta is real. You will spend hours of your life sitting on I-75 or GA 400. If you dream of a quiet porch where the only sound is crickets, this isn't it. The sound here is construction equipment and leaf blowers. Furthermore, there is a dangerous age gap trap. Many people move to Georgia at age 60, thinking they will get the deal. They buy the house, and then realize, wait, I have to be 62 or 65. For those 5 years from 60 to 65, you are paying the full tax rate. On a $400,000 retirement home, that could be $25,000 in taxes you pay over 5 years while waiting to qualify. You must read the fine print of the specific county. Also beware of the city limits. This exemption usually applies to county taxes. If you buy inside the city limits of Atlanta, Decatur, or Marietta, you might still owe city school taxes, which might not be exempt. You have to look at the map with a microscope. Being one street over inside the city line could cost you $3,000 a year. And finally, let's talk about the ad valorem title tax, TAV-ET on cars. When you move to Georgia and register your car, you don't pay an annual tax like in West Virginia, but you pay a one-time massive tax up front. It is currently 6.6% of the fair market value of your car. If you bring your $50,000 truck and your $40,000 RV from Florida to Georgia, you have to write a check for nearly $6,000 at the DMV just to get your metal license plates. It is a brutal welcome to Georgia fee that catches almost everyone off guard. Number 2. Alaska. If you are truly hardcore, if you are willing to trade sunlight for solvency, Alaska is the ultimate tax shelter. On paper, this looks like a mistake. You might see lists saying Alaska has high property tax rates, and in some boroughs that is true. But those lists ignore the senior citizen exemption. This is a state-mandated program. If you are 65 or older, the first $150,000 of the assessed value of your home is exempt from property taxes. This applies to every municipality in the state that levies a tax. Some boroughs, like Anchorage, can vote to increase that exemption even higher. Let's look at the math. You buy a modest dry cabin or a small fixer-upper in the Matsu Valley for $145,000. Minus the $150,000 exemption, your taxable value is negative $5,000. Your tax bill is zero. And it gets better. There is no state income tax. There is no state sales tax, though some local boroughs charge a small percentage. And then there is the PFD, Permanent Fund Dividend. The state government literally pays you to live there. Every year, every resident gets a check from the Oil Wealth Fund. In 2025, that check was over $1,000 per person. If you are a retired couple, the state is handing you $2,600 cash, while charging you $0 in property tax and $0 in income tax. From a purely mathematical standpoint, Alaska is the only state where the effective tax rate is negative. They pay you the catch, the cost of living multiplier, and the darkness. Math is one thing. Reality is another. Alaska is not a state, it is a logistics challenge. Everything you buy has to be shipped on a barge or flown on a plane. This is the barge tax. A gallon of milk is $8. A loaf of bread is $6. Fresh vegetables are a luxury item that rot within 2 days of buying them. You might save $2,000 a year on property tax, but you will spend $4,000 extra on groceries. Then there is the heating bill. Unless you have your own woodlot and the physical strength to chop wood at minus 40 degrees, you are relying on heating oil. Filling a 500-gallon tank in the dead of winter can cost $2,500, and you might empty that tank twice in a season. That free PFD check, it goes straight to the oil company to keep you from freezing to death. And finally, the mental toll. Seasonal affective disorder, SAD, is real. In Fairbanks, in December, the sun rises at 11 a.m. and sets at 2:30 p.m. You are living in 20 hours of darkness. For many seniors, this leads to severe depression and vitamin D deficiency. Alaska pays you to live there because, quite frankly, living there is a full-time survival job. Number 1. Alabama. We have arrived at the king. If you want the absolute lowest carrying costs in the developed world, you go to Alabama. Alabama already has the lowest property tax rates in the nation by default. But for seniors over 65, it becomes a legal loophole that feels like robbery. Here is the secret code, the total exemption. First, simply by being over 65, you are exempt from the state portion of property taxes. That's automatic. But the real magic happens if your taxable income is below $12,000, or if you are considered totally disabled or legally blind. In these cases, you are exempt from all ad valorem taxes, state, county, and city. Your bill is zero bloint sun. Even if you make too much money to qualify for the total exemption, the baseline is absurdly low. Let's say you are a rich retiree with a $200,000 house in Baldwin County. Because of the current use laws and the senior freeze, your tax bill might be $350 a year. Compare that to a $200,000 house in Illinois, where the tax bill would be $6,000. You are saving $5,650 every single year. Over a 20-year retirement, that is $113,000 in savings. That is the difference between retiring in poverty and retiring on a cruise ship. Alabama is the closest thing to free land you will find in 2026. Once you buy the house, the government effectively stops sending you bills. The catch: the food tax, the tornadoes, and the healthcare gap. Alabama knows it can't tax your house, so it taxes your dinner. Alabama is one of the only states that taxes groceries at the full sales tax rate. In some cities, the combined sales tax is 10%. Imagine paying a 10% tax on beans, rice, and medicine. It is a hunger tax that disproportionately hurts the elderly. Then there is the weather. Alabama is the heart of Dixie Alley. Unlike the Midwest, where tornadoes usually happen in the afternoon, Alabama gets nocturnal tornadoes. These are massive EF4 storms that hit at 3 a.m. while you are sleeping. You can't see them coming. You just hear the freight train noise before your house disintegrates. Because of this risk, homeowners' insurance is skyrocketing. You might pay $0 in taxes, but $3,000 in insurance. And finally, infrastructure. Alabama property taxes are low for a reason. The government provides almost nothing. Rural Alabama suffers from the hospital closure crisis. There are entire counties with no emergency room. If you have a stroke in a zero-tax county, your ambulance ride might take an hour. And that ambulance ride isn't free. You have to ask yourself, is saving $300 a year worth being 60 miles away from a defibrillator? So there you have it. 7 states where you can legally starve the taxman. From the frozen darkness of Alaska to the humid tornado alley of Alabama. The lesson here is simple. Freedom isn't free. You are always paying a tax. Sometimes you pay with money, like in New Jersey. Sometimes you pay with your time chopping wood in Maine. Sometimes you pay with your safety, no police in West Virginia. And sometimes you pay with your health eating tax-heavy processed food in Mississippi. The government always gets its pound of flesh. You just get to choose where they cut it from. Our advice? Do the math on your total burn rate. Don't just look at the tax bill. Look at the insurance, the groceries, the heating, and the gas. Often the zero-tax state is actually more expensive than the low-tax state once you factor in the hidden costs of survival. But if you are determined to escape the system, you need a place where the rules don't apply at all. If you want to build a house where even the permit office doesn't exist, you need to watch this video right here. Stop asking for permission. 10 counties where you can build anything. We break down the places where you can opt out of the building code entirely. Click that video, keep your powder dry, and I'll see you in the next one.